February 5th, 2013. So, those of you that took economics in college, remember Economics 101, the riskless rate. What was the riskless rate? U.S. government bonds, supposedly without risk. As I pointed out in that video a few years ago when I had long hair, and I think it has 400,000 views or something, every paper currency in the history of the world has become worthless. So, TBT is starting to move, and I question a lot of things, but to me, the U.S. government bonds are not a riskless rate. In fact, they're fraught with risk, and there's still trillions of dollars of money that considers it a safe haven. So the stock market down 150 on Monday. You notice people went back into bonds. Today the market's up. People got back out of bonds. At some point, U.S. government bonds, which is lending the U.S. government money for 10, 20, 30 years, I think they will yield over 10, then over 20%, and then eventually will become worthless. The question is when. TBD is starting to move. People are watching the charts. I kind of just drew lines through the 1-year chart, 6-month chart, 3-month chart, 1-month chart, 5-day chart, 3-day chart, and 1-day chart, and starting to look kind of like a good time to get a position. I've got friends out that are the technical guys, and they're better than me. I'm like long-term, eternity, fundamental like guy, but there's a lot to be said for charts and trends, especially in what economists would term the medium or short term. So, it's not the riskless rate. TBD's headed towards 70, it'll go to 80, then 100, then 150, and TBT will go over 200. So the question is when. And if you're going to play that with strike price and how far out and that kind of stuff. But I'm watching it closely. Fortunes will be made and lost in 2013. It's going to be lucky for some and unlucky for a lot of others. But here's Manoftruth just to tell you that the U.S. government bond does not have a riskless rate. And the fact that Eric Holder's going to sue S&P for $5 billion allegedly, I'm like, truth is stranger than fiction. I called the real estate market back then because I saw it in California. You got teachers buying 2 houses in Stockton with 0% down. What killed it is no more no-doc loans. The government wants to fix things. Go have no-doc loans anymore. Loosen up the lending requirements like they were 5 or 6 years ago, 7 years ago. Pretty simple, but it's an engineered crash, and the big question is to find out when. I think I'll lift a little more because it just kind of reeks, doesn't it? Buena suerte todos. Pero al fin de los Estados Unidos, yo lo puedo ver, pero solamente estoy pensando, ¿cuándo será? ¿Cuándo será? Pero creo, de en serio, bueno, para mí ya pasó, ya sucedió, ya está todo matemática, estudiando la matemática de los Estados Unidos y las deudas, el fin ya llegó. Ahora es una pregunta. I don't even know how to say bonds in Spanish because my vocabulary wasn't doing that. But it's over. The question is when, if you want to profit from it. And then, of course, depending what you can depend on and not depending what you can't depend on. God bless in the discernment. Ciao.